I want to feature this because it kind of gives us an idea. Now, Hewlett Packard has two symbols, right? HP Incorporated, which is HPQ. That's what we're looking at. That's their bread and butter business, right? That's their printers and, all of that good stuff. They also have a ticker symbol called HPE, which is Hewlett Packard Enterprises. This is a spinoff of them where it's their business that goes in on the enterprise level and works on solutions for companies and things like that. But we're looking at HPQ, the bread and butter business. Remember, boring is where it's at for premium sellers. And as you can see here, we have some tested support around $34, and we have some tested resistance around $38.50. And when I say that, I'm talking about we're in a medium duration channeling, sideways channeling movement for Hewlett Packard. But the short duration trends are oscillating between this support resistance, which actually makes that support and resistance stronger. Every time you test resistance, it gets stronger. Every time you test support, it gets stronger. But a lot of people are saying, well, what do I do on the travel from one to the other, right? We make our decisions, we take our actions at these reversals, but on the travel, it doesn't mean we sit idly by. Right now, you can see we're right in the middle of the channel. Let me zoom in here a little bit so you can see what I'm talking about. The middle of the channel, the exact halfway point is at $36.25. But the middle of our channel, if you go a little bit on either side, is about 35.72 to 36.78. We're right in the middle of that channel. We've been closing there for the last 2 days. All day today, we're trading in this zone. This is the time when we should be either planning out our trade on this symbol, or if we've already got a plan on this symbol, this is the best time in order to update that plan. When we're in the center of the channel, we can create a risk model of the worst case scenario. The worst case possible premium trade is when we're in the center of the channel and we decide to do a buy right or a short right type transaction all at the same moment. And so, if you remember with our risk modeling, what we like to do is get the worst case scenario. So, today is how you can model the worst case scenario. Once you know the worst case scenario, what's the maximum risk that you can see in doing this position, you can then use that in order to calculate position sizing. So, every time we cross the center of the channel, in any of our premium selling positions, that's the time to not sit idly by, but instead, this is the time where we take a moment and we update our trade plan so that when we do hit those peaks and those troughs, we have the best, intel on how to trade this position moving forward. So I wanted to highlight this one because today, this evening, after the market closes would be a good time for you to update your plan on Hewlett Packard Incorporated for your Monday trading.
And then what time frame are you kind of looking at in order for any trade to actually be triggered?
So it looks like, and Hewlett Packard's moving nice sideways, SIP, which means that a couple things. When we have a symbol that's, in a nice sideways channel like this, where there's really no tilt up or down with the trend, those are our best performers for selling premium. They're going to give us the most reliable paychecks every time we sell premium. So I search these out. I look for these needles in the haystack. The other good thing about that is that it doesn't matter whether we start the investment at a top or at a bottom. So in this case, since we're crossing the middle here, the next thing on our radar is another top. And so it looks like we would be able to start a position, leg into the first part of a position, maybe in the next 3, 4, 5 days, sometime next week, once a top has been found. And then, of course, as it travels down, we accrue value, and then once it hits the bottom, that's when we set up our trade zone and make that paycheck. So I'm thinking the first part of legging into the position is probably going to happen by the end of next week, and then the second part is probably going to be, I would imagine, towards the middle, if not end of March.
And so the little blue dot and the little green dot at the bottom, those are earnings and what else?
This is the dividend that they offer. So dividends, that's a good observation. Dividends are, as you know, a company issues dividends to the shareholders. When you see that a company gives a dividend, especially a dividend that's on the higher side, like 25 cents per share, if you think about it, anybody who buys a $35 stock, it looks like 4 times a year, they're going to get 25 cents per share. I mean, that's a pretty good ROI for just owning this stock, which means that the investors are not actually going to go and demand or put pressure on Hewlett Packard to try to make their stock price go up, because they're perfectly happy just owning the stock and collecting the dividend. That is something that, as premium sellers, when we think that sideways moving stocks are the best stocks for our strategy, we look for good dividends, because good dividends mean that it's going to stay going sideways, or it's one more indication that the investors aren't going to try to push the company to go higher or go lower.